Greetings, my name is Dafakhrizal Kautsar from Institute Technology Bandung. Today I would like to present my research entitled Factors Influencing Generation Z Participation in Capital Market. These are the contents that I'm going to deliver today. The Indonesia capital market has been established since 1912 and keeps growing. One of the indicators that represent the growth is from market capitalization. It has recorded a favorable growth at 18.4% in 2021. The positive trends were followed by the increasing number of retail investors in Indonesia's capital market. By the end of 2019, there were only 2.84 million investors, or 1% of Indonesia's total population. However, by the end of 2020, the number of investors increased by 56%, reaching 3.88 million. And at the end of 2021, there are 7.48 million investors in the capital market that record an increase of 92.99%. In fact, according to a survey held by Financial Service Authorization or OJK in 2019, Indonesia has a low financial literacy index at 38.03%. Same survey also revealed that West Java recorded the lowest financial literacy level among other provinces in Java. Even worse, the financial literacy level is decreased from the previous financial literacy survey in 2016 at 38.7% to 37.4% in 2019. Regarding the information technology, utilization of technology has a positive impact and become one of the main drivers in the increasing of Indonesian investors, especially during the pandemic. According to data from Ministry of Internal Affairs, at the end of 2021, the total population in Indonesia has reached 273 million people, while the total capital market investor was only 7.4 million people based on SID calculation. There is a huge gap between the number of investors with the total population in Indonesia and still lack of participation in capital market by Indonesian citizens. However, it also can be seen as an opportunity that Indonesian capital market still has a huge room to grow. One of the ways to achieve the developed and growing capital market is by increasing the numbers of investors, especially Generation Z, as they have the largest portion of Indonesian population. By analyzing the factors that influence this generation to participate as an investor in the capital market, related parties can create strategies to increase Generation Z participation in the capital market, targeting those who have not participated in it. Given the issues, the researcher believed it would be worthwhile to carry out the study to address the following questions. First, does financial literacy influence the Generation Z to participate in the capital market? Second, does information technology influence the Generation Z to participate in the capital market? And third, what is the recommendation that can be given to enhance the Generation Z participation in capital market? Thus, the research objectives are to know the influence of financial literacy towards Generation Z participation in the capital market, to know the influence of information technology towards Generation Z participation in the capital market, and to provide recommendations and suggestions based on the research analysis result. Financial literacy is an understanding of a prominent financial concept and ability to manage personal finance by means of financial planning with the awareness of economic situation. Previous study that related to this research has been conducted by Afghani et al., Sivaramakrishnan et al., and Panrui et al. Regarding the information technology, as technology becomes more advanced and used in capital market transactions, retail investors are increasingly favoring capital market transactions with the online trading facility provided by a securities company or wealth management fintech. Many previous studies has been conducted that related to this study from Malhotra, Hutasut and Ginting, and Masura et al. Next, about the technology acceptance model. According to technology acceptance model, the two main factors influencing whether information system will be accepted or not are perceived usefulness and ease of use. Previous study that related to this study has been conducted by Chong et al. And Roca et al. Next, about the perceived trust. From the perspective of social psychology, trust is defined in terms of expectation and readiness of the trusting party to engage in a transaction. Perceived trust has been used in previous studies to analyze attitudes toward using internet-based products and services and online banking acceptance. Regarding the capital market participation, according to Nadim et al. In 2020, it refers to purchasing stock on the stock exchange in order to increase wealth. There are several previous studies that attest the factors that influence the capital market participation conducted by Panrui et al., Young, Sivaramakrishnan et al. And Conlin et al. Generation Z is an age group that born between 1996 to 2012, and the characteristic has been analyzed in research by Berkup and McGrindle. From the literature review, the researcher came up with this conceptual framework and developed two hypotheses. First hypothesis is financial literacy has a significant influence on capital market participation, and the second hypothesis is information technology has a significant influence on capital market participation. The research methodology is using quantitative approach. The researcher employs non-probability sampling with the minimum sample as 400 based on the Slovene formula and targeting Generation Z that domicile in Bandung City. The analysis using descriptive analysis and logistic regression. Next, the researcher will show the questionnaire results. First, the respondent age are ranging between 17 to 26 years old, and the majority of respondents are from the age of 20 years old. Then the validity and reliability test exhibit that all the data in the study are valid according to the Pearson correlation value and reliable based on the Cronbach alpha result. All of the assumptions from this model has been met. First assumption has been met since the outcome that is dependent variable is binary, whether the respondent participate or not participate in the capital market. For the second assumption, the researcher assumes that all the observation in the study is independent since the respondents are different individuals. For the third assumption, p-value addressed to attest the absence of multicollinearity. The result shows that p-value of financial literacy and information technology as the predictor in this model are below 5 and meets the assumption. For the fourth assumption, to assess the linearity of independent variables and logouts, box-it-will test has been conducted and shows the result that each independent variables are linear to the logouts. The significance value result of the variables are greater than 0.05. And for the fifth assumption about the large sample size, the study has 412 respondents, which means it has exceeded the rule of thumb of EPV 50 that require 350 samples as a large sample size. The omnibus test result indicate the overall model fit. From the omnibus test result, significance value is 0.0 that indicates the new model gives a significantly better prediction than the baseline model. The researcher uses Hosmer and Lemeshow test to assess the goodness of fit from the model. Based on the test result, the p-value of the model is 0.178, that greater than 0.05, which means that there are no significant differences between the model and the data observed and considered a good fit. The pseudo R-squared result measure how the model can explain the capital market participation. From the Nagelkerk R-squared result is 0.325, means that the model could explain the variability of dependent variable by 32.5%. Here is the equation in variable result and constructed the equation of logistic regression as shown in the slide. Financial literacy has a positive correlation to the dependent variable indicated by regression coefficient value of 0.176, and it also in line with the odds value that greater than 1, means that there is positive influence for every 1 unit increase in financial literacy is expected to increase the capital market participation by 1.193. This variable has p-value results 0.0 that is less than alpha value, means it must reject the null hypothesis. It implies that financial literacy has a significant influence on the dependent variable. Information technology has regression coefficient value of 0.136 that indicates a positive correlation to the dependent variable, in line with the odds ratio value of 1.146 that also represent a positive influence towards the independent variable, which per 1 unit increase of information technology is expected to increase capital market participation by 1.146. Furthermore, the p-value results 0.002 that is less than alpha value 0.05, means it must reject the null hypothesis. It exhibits that information technology has significantly influenced the dependent variable. Based on research result, the researcher came up with conclusion that financial literacy has a positive correlation towards capital market participation, and it means that the higher financial literacy that Generation Z had, the higher the probability of them to participate in capital market. The result of statistical analysis exhibits that financial literacy has a positive and significant influence towards Generation Z participation in the capital market. In line with the financial literacy, information technology has a significant influence towards Generation Z participation in the capital market. Furthermore, information technology and capital market participation are positively correlated, which indicates that Generation Z is more likely to invest in capital market if they had found the information technology that provide usefulness, ease of use, and trustworthiness. Thus, to improve the Generation Z participation in the capital market, we need to enhance this generation's financial literacy and develop an information technology that provide perceived of usefulness, perceived ease of use, and perceived trust among Generation Z. The study will provide a valuable recommendation for Generation Z, policymaker, securities company, and wealth management fintech companies, and also for further research. For Generation Z, they need to realize the importance of financial literacy. Financial literacy leads Generation Z to participate in capital market as they are aware about investing. Addition, financial literacy will also prepare them to decide which financial product or services that they will use, and it is related with this research finding regarding information technology. For policymakers should focus on enhancing financial literacy of Generation Z, and they could collaborate with social media influencer, securities company, wealth management fintech, student-led organization, or create investment gallery in universities. The research suggests supporting the information technology ecosystem, especially in the capital market. For securities company and wealth management fintech, although their focus is on investment, the researchers suggest them to broaden the education program, including financial literacy, since financial literacy has significant influence on capital market participation. And also for the application improvement should be focused on UI UX, security, and features that can increase users' performance. For future research, could add the predictor that considered to have an influence towards capital market participation. Also, the research respondent could be broadening not only that domicile in Bandung City. So, that's all from me. Thank you for your attention and have a good day.